And Placer County wants Governor Gavin Newsom to declare a state of emergency when it comes to the insurance crisis here in California. We brought you this news last week after county supervisors sent this letter to Newsom and the state insurance commissioner. Well, tonight we follow up with a Placer County homeowner who we met 5 years ago, who moved in part because his insurance was just so high. Now he's paying a fraction of the price from his former insurance premium without even leaving Placer County. ABC 10's Becca Habecker explains.
But something needs to be done.
We first met Craig Casey in 2019 at a town hall held by California Insurance Commissioner Ricardo Lara. Craig was there because he and his wife had spent thousands of dollars hardening their nearly 5-acre North Auburn property against wildfire risk, and their insurance company still dropped them. They were forced to go to the bare bones FAIR plan, costing them about $4,000 at the time just for fire coverage.
It's unfortunate. We need insurance, so we have to pay it.
Statewide, California's homeowners insurance crisis of affordability and availability has only gotten worse in the past 5 years, with most of the major carriers pausing or limiting business here, citing the rising risk of wildfires, high cost of building materials, and what they consider burdensome state regulations.
It's truly a crisis.
Last week, as ABC 10 reported, Placer County supervisors sent a letter to Governor Newsom and Commissioner Lara asking them to do more to alleviate the crisis and faster. So I reached back out to Craig Casey to see how his insurance situation had changed since we last spoke.
I'm in a different place than I was 5 years ago.
Literally, Craig and his wife moved from their rural property in North Auburn to this new development in Lincoln, Esplanade at Turkey Creek. He says insurance was one of several factors in that decision. Between fire insurance with the FAIR plan and a so-called difference in conditions policy that covers other risks, they were paying about $7,500 per year. Now, for full coverage of their home,
I'm paying $790 a year for everything, and I have very generous coverage on content and everything else.
The developer of this gated community is Taylor Morrison, which owns Taylor Morrison Insurance Services, an agent recommended to the Caseys after they closed on the purchase of the house. Craig says they offered him that less than $800 a year premium through Universal North America Insurance Company. We reached out to the developer, Taylor Morrison. A spokesperson said Taylor Morrison provides insurance options to customers building a home with the company. While purchasing insurance through the company is not required and customers can select any provider, Taylor Morrison strives to offer insurance options that best meet buyers' needs. Casey says he'd still like to see California's insurance market stabilize.
It's a huge problem in this state.
Commissioner Lara has proposed major changes to California's insurance regulations, which he promises will be in effect by the end of this year. In Placer County, Becca Habecker, ABC 10.
We reached out to the California Building Industry Association to ask if they're seeing other developers offer insurance to people buying new homes. A spokesperson said the person who could address that question wasn't in the office today.